So, ladies and gentlemen, you're most welcome to today's session. Yep, at the trading chatter. So, today we are going to be unleashing a lot. We are going to be talking about a lot of things here. So, I just want you to sit, enjoy the ride, enjoy today's session. So, before we start talking about whichever things we are going to talk about today, uh, just want to thank God for life. Thank God who has protected us, who has given us knowledge, wisdom, and understanding, and He has given us ability to always show up every day. We do not take that for granted. It's not our energy, it's not our resources, but then everything has been provided simply because of Him. So today, I just want to have a little breakdown here on NASDAQ before we start. So this is Asia session. It's going to be quick. We've been talking about these things. I do not expect anyone to be asking random weird questions. So Asia, what do we expect in Asia? We expect Asia to do what? To accumulate. So we only expect Asia to do what? To have manipulation if it takes out the previous session's low or high, of which if you look here, nothing was taken, just gapped and it just consolidated. So which confirms that as what? It confirms that as a clear, accumulation phase. Then we come to London. What do we expect from London? If London takes out Asia high or low, that is literally what we call a manipulation. So as I told you guys last time that we have, this is manipulation. We have types of AMD patterns. We have a type that's called a reversal pattern and then the continuation pattern. So this one, in this case today, it's just the continuation pattern where you have Asia accumulate, London manipulates above Asia high, then New York also comes and boom, takes out London high and just continues distributing in a continuous form. So which is what we call a continuation AMD pattern. So this is London manipulation. So you can see here that New York opened. So I hope everybody is seeing. New York opened at 7 a.m. New York time. So New York opens. This is London high. You can see I've labeled it here, LH, which stands in for London high. Then this line here, this lowest point here is London low. You can see I've labeled it 2 here, LL, London low. So you can see that after price forming London high, London high and London low, it started doing what? Accumulating in between that range. So before they take out London high or London low, we are not trading. Until they take out a significant key level, we are not trading. So it was until they took out London high that, yes, points started making clear, like price action started becoming clearer. So you can see that immediately they took out London high. What did they leave? They left this order block. I hope everybody is seeing that order block. So I've labeled it there, OB. Is everybody seeing it? Thumbs up if you're seeing it. Thumbs up if you're seeing it. There's an order block there that I've labeled here. So, and this order block is what? It's in close proximity to what? London high. So that means as they were taking out this high, they kind of formed what? Equal highs. Then price retraced a little bit to get what? Momentum. That's why you can see now this big candle pulling off. Now this candle is an inducement candle, like it's coming in to do what? To take out people's stop losses that are kind of seeing equal highs and are trying to sell this market simply because they're seeing equal highs or double highs, wherever they call them. So you can see that they pulled them off with this big candle and stop losses were hit, and that's all liquidity that was generated and has been taken, has been captivated on. So by what? By institutional traders. So price goes up, it left this order block, then it returned back to do what? To retest on that order block. So on that return to retest on this order block, that's where you would get your entry, and yeah, you would take out some nice points. So for this case, this is like a 4%. You can see that 4%. This trade was a 4% trade, so you can see that it was sweet and clean. So yeah, And all in all, it is just about patience, 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 patience. Like, you just always have to wait, be patient, and these things shall play out in your favor. So, as I've told you guys that today we are going to be talking about a lot of stuff. So, to resume from where we stopped last week, a lot has been taught. Willie has been teaching about a lot of stuff. Just to make a recap before we continue, just so that you slow down a little bit and know what you've covered and how much you must be able to do by your own and by yourself. So, is everybody seeing that? Is everybody seeing that? Thumbs up if you're seeing that. Yes, so literally this has been the beginning, or this is the beginning of the boot camp. The disclaimer was the beginning part. So we came up from so that was the disclaimer, and yeah, a lot of information was shared about it, and you can read it in your free time. But then all rights are reserved, no copying, no doing anything. This information has been precisely made and collected by the trading charter. So, and we've presented it in the simplest, humble, gentle way to you guys, and I hope all you guys understand and apply these things. There's a lot that has been shared. For example, if we start from here, it all starts the input one, the input two, the output of the information from the computer. That's how literally we are trading right now. It's called high frequency trading. So now, high frequency trading is the kind of trading that involves the AI or the computer. So this is what's happening right now, and we say that the AI captivates on what human behavior, which is the psychological concepts: fear, impulsiveness, greed, and FOMO. Furthermore, we went and we split down fear. We talked about fear. If you are a newcomer here, you would go back to episode 1, episode 2, episode 3, up to episode 12. Watch all those episodes consistently in their order, and you'll figure out that there are a lot of gems that have been shared. There's a lot of advice, there's a lot of information that has been shared in those videos. Follow them consistently and you'll figure out all these things. We've talked about fear, we've talked about FOMO, which is fear of missing out. We've talked about impulsiveness, we've talked about greed. All these things have been spilled. So we've also talked about the algorithm, and we say that the algorithm here plays a big part in trading nowadays. Why? Because the algorithm is the middle guy. It's the middle guy. We get the input 1, input 2, that are delivered into what? The algorithm, which is the AI, then which gives us outputs. And we say that these inputs are what? Are price and time. Input 1 is what? Time. Input 2 is what? Price. So we also say that the interbank price delivery algorithm, which is IPDA, is a concept within ICT, inner circle trader or trading methodology, which suggests that price or market price movements follow a structured algorithm rather than random fluctuations. According to ICT, large financial institutions, banks, hedge funds, and central banks use IPDA to efficiently distribute liquidity and manipulate price action. So these have to be points of interest. Points of interest, IPDA. Know how these things work, make some research on these things. What did we say furthermore? We say that input 1 is time. If you come back here, you're seeing input 1, input 2 that are sent. These are variables that are sent into what? A computer or the algorithm, which gives us output. So you can see here that we are having the place where input 1 is, we are having what? Time. The place where input 2, we are having what? Price, which goes to what? The AI, which gives us what? A macro. The macro is going to give us what? The outputs, where we have output 1 and output 2. Output 1 is what? Inefficiencies. Output 2 is what? Highs and lows. So you can see these areas of output levels are either areas of inefficient price action like fair value gaps and inefficiencies, or voids, or gaps, which are inefficiencies, or there are liquidity levels above or below old highs, which are highs and lows. Those are the outputs. Furthermore, we split down the highs and lows. We talked about them. An algorithm IPDA is responsible for moving price in the markets and engineer liquidity into the marketplace. and to offer fair value in the market. What fair value means is balancing. You understand? We are in the financial markets, and there are two things that happen. There's buying and there's selling. So that means there are buyers and there are sellers. So that means we're having 2 points of probability. So that means market is either buying or selling. So that means price has to balance these two by offering what? Fair value. That's why you see price moves in a zigzag way, or in an up down way. That kind of behavior, simply because it has to balance. Price can't just move in a straight line. Why can't price do that? It's because it has to balance. It has to offer fair valuation of price. And now this further can be found or can be understood very well in the fair valuation, like auction pricing and macroeconomics. You would understand this very well, why price moves like this, and to exactly know where price would stop, like certain levels. So yeah, IPDA will target liquidity above or below old highs. So you can see where these old highs and lows are liquidity points. These liquidity points are furthermore looked at price for what? Future movement, future liquidity providers. Why? Because price is seeking these highs to take them out and form new highs and new lows. So furthermore, they talked about the macro itself. The macro is a specific time window where delivery is expected. So you have to know that. We also talked about the chart, and we said that the chart has the x-axis and the y-axis. The y-axis is representing what? Price. The x-axis is representing what? Time. So furthermore, we talked about the inefficiency. What is an inefficiency? We talked about it. What is displacement? It's all here. If you have not watched, or if you do not know these things, go back and revisit these videos. Revisit them until these things are second nature, until you feel them inside you. Until that time, you're still having a lot of work to do upon yourself. These things have to be second nature. Why fair value? The algorithm is designed to offer fair value to both buy side and sell side, to both buyers and sellers. In some cases, price will rush upwards, leaving gaps. So these gaps furthermore shall be priced, shall be rather balanced in future. So that's why price always goes up, comes back down, or goes down and comes back up. So the market operates at fair value. This will be mid-price between discount and premium. And the example is here. The mid-price equilibrium is a fair value price between the highest price premium and the lowest price discount. The market will always reprice back towards Price will always reprice back towards equilibrium, since equilibrium is fair value towards the highest and lowest prices. I think everybody is now getting it. Why price shall always reprice back towards equilibrium. Equilibrium is just that middle point between the lowest low and the highest high. That middle point there is what we call equilibrium, mean threshold or consequent encroachment, and price shall always come back there in order to offer fair value. The market will always reprice back to those levels or to that level. To offer buy side delivery to areas where we've only had sell side delivery, for example, in areas where we've got a CB, which is a sell side imbalance, buy side inefficiency. All these things have been mentioned and have been taught in the previous lectures. I'm just passing through you guys to show you how much content you're having right now, that you guys must be knowing a lot of things. You must have put a lot of practice into this to see these things in real-time charts, in real-time price action. So I believe that all you guys are putting in that time. There's an example here of a BC, which is a buy-side imbalance, sell-side inefficiency. It's just a fair value gap, or a gap in between three candle formations. And it's there, and it was well explained. Here the algorithm repriced to buy side to quickly leaving a buy side imbalance stroke gap. The body where no wicks overlap is a buy side delivery. Note, the body where no wicks overlap it is a buy side delivery and inefficiency of the sell side delivery. So it's just this red point here, this red point that you see where they've labeled BC, only buy side was offered. So what happens? The price has to come back to this point to balance Now price, the movement of price coming back here is now what we call what? Fair valuation. You understand? It's what we call balancing of price, offering fair value. So they come back here, they offer fair value, and then price can furthermore go up again. So you can see here we're having an example of a CB, which is the sell side imbalance, sell side inefficiency. Here the algorithm repriced to the sell side, too quickly leaving a sell side imbalance stroke gap. The body where no wicks overlap is all sell side delivery and inefficiency of the sell side delivery. So you can see same thing, the body where no wicks overlap it is now our gap, and then price has to reprice further into this gap to balance it in order for price to offer fair value. Then price shall go down. An example is here, redelivered price. Here buy side movement has been redelivered back through the sell side imbalance. So that imbalance that we've seen, price has now come back to it, and it has filled that balance or that inefficiency. So it is no longer called an inefficiency, it's called a balanced price range. The inefficient sell side imbalance has now been matched with buy side price delivery. That big candle, this green candle that you've seen that has pulled back into this inefficiency, is now balanced. It's what we call the balancing candle, or the rather you could call it the candle that is offering us what? Fair value. So now this movement of price offers us something we call balanced price ranges. At the end of it all, we no longer call it an inefficiency or fair value gap. Now we call that price action a balanced price range of both buy side and sell side. Why? Because the buyers have been balanced and the sellers have been balanced. So there's no one demanding for anything. Everybody is happy. The sellers have made money. The buyers have also made money. Is everybody getting this? Thumbs up if you're getting it. Thumbs down if you're totally confused. Yes, thumbs up if you're getting whatever I'm talking about here. Alright, just to make sure that everybody is getting this, I'm going quickly because we've taught these things. So if you're part of the guys that are not understanding this, I would recommend you to go back and revisit the previous lectures. Like, it would be much of your good. So redelivered price, same thing. So price again travels back to the intended direction. Yeah, we talked about support and resistance, how we are going to use fair value gaps and order blocks as our points of support and resistance. We talked about the upper quadrant, which is half labeled, that's the premium. Then the lower quadrant, half of the labeled, is the discount. The middle part, which separates the two quadrants, is called the equilibrium, midpoint, mean threshold, or consequent encroachment. So yeah, so a fair value gap like this is offering us what? Resistance to push price lower. So all these things have been taught. You can see a lot has been shared. A lot has really been shared. A lot has really been shared. We've talked about the AMD pattern, and this is now the pattern that is going to lead you to your trading strategy. Without AMD, without figuring out the consolidation of price, the manipulation of price, and the distribution of price, please and please, you're just lying yourself. So everything starts with a consolidation. Everything starts with a consolidation. For example, as a child is growing, what is the first stage? The first stage is crawling. So crawling is just the same thing with consolidation. When a child or when the baby is crawling, they are not moving so fast, they are moving so slow. You understand? It's just baby steps. You understand? It's the same thing here in the financial markets. We are having a consolidation starting the cycle. So this is always like this. Why? So that they can generate what? Liquidity. IPDA is doing this, the interbank price delivery algorithm is doing this in order to generate liquidity that is going to be capitalized on by the what? The manipulation and the distribution. So now you have to understand this, that price starts with a consolidation, and if that holds price in a range, allowing liquidity to build up above the consolidation range and in the form of buy stops, and below the consolidation range in the form of sell stops. This is known as accumulation, and the example is here. You can see it. Buy stops are above, sell stops are below. Is everybody seeing that? Thumbs up if you're seeing that. clean and clear. So IPDA will then reprice above the consolidation range, triggering the buy stops into active market orders. This is known as manipulation. Manipulation example is here. This is the manipulation leg here. If you can see it here, this leg that passes through the buy stops. So they've taken out the buy stops, they've triggered them up. Smart money will pair liquidity from the willing buyers, buy stops with short positions, and then offload these positions to willing sellers below the consolidation range, which are the sell stops. This is known as what? Distribution. So note, this whole process is part of IPDA's market efficiency logic, where this logic is part of IPDA, interbank price deliveries algorithm, market inefficiency logic, where smart money will sell off to the buyers and then buy back from the sellers and vice versa. So now this whole thing here, what that's happening is literally similar to the fair valuation of price. It's just the same thing, you understand, but just packaged in a different way. There are ways to determine when and where this process is likely to happen. The speed of the manipulation leg causes FOMO for buyers who are chasing the market. So FOMO is fear of missing out. So the speed in the delivery and manipulation leg causes FOMO, fear of missing out, to the buyers and to the sellers in the market. We furthermore talked about PD arrays, and we say PD arrays are literally those points, those specific logical points that you literally want to be using as support and resistance. We have order blocks, we have fair value gaps, we have breakup blocks, order blocks, rejection blocks, and many other terms. And it's just weird. Like whenever you go down and dig deep into these markets, you'll figure out these points and you would use them. So here we say that these arrays are data points. These PD arrays are data points that are stored within a program. Program takes us back to what? Input 1, input 2, the algorithm, the outputs, and things like that. These arrays are key price levels stored into the algorithm's IPDA. Repricing logic relative to premium and discount markets, and will be referred back to at a later date. These arrays become active when time aligns with price. Note this, when time aligns with price, these PD arrays will become active. There will always be different arrays present in each swing that can offer support and resistance. Monitoring, note that again, there will be different arrays that will present themselves in each swing, in each price movement that can offer support and resistance. I'm not talking about going to your chart and just draw random lines and call that support and resistance. No, we use PD arrays to note or to define our support and resistance levels. For example, fair value gaps, order blocks, breakup blocks, mitigation blocks, whichever block you know. It can be a brick. So it is just weird. So whichever block you know. So furthermore, we say that monitoring how price reacts to these levels can help us gauge order flow in a bullish or bearish market. So the example is there. You can see old high or low, rejection block, old order block, breakup block, mitigation block, fair value. Yeah, they are all there. Yes, a lot has been shared. I'm just passing through these things to show you that we've covered a lot. So yes, so we reached this point where I talked about elements of a trade setup, and I say that there are 3 major elements of a trade setup. And these elements are literally going to enable you improve your trading and patience to wait for the 3 elements to be laid out. These are the following: trend, support and resistance, risk management. Yes, furthermore, they were broken down here. Yep. So a lot has been covered up to this last point where we talked about discipline. We talked about what did we say? Okay, we talked about mindset, psychology, and composure. What did we talk about here? We talked about trading and business mindset. A, developing a growth mindset, embracing failures as learning opportunities, being adaptable in the markets and business. focusing on long-term success rather than short-term gains, always seeking continuous learning through books, courses, and mentorship. B. Risk management and strategic thinking. Only risk Only risk what you can afford to lose. Have a clear risk to reward ratio, 1 to 3 minimum. Never make impulsive decisions. Always follow a structured plan. Diversify your investments to minimize potential losses. Discipline and consistency. Stick to a defined strategy in trading and business. Avoid emotional decision making, e.g., revenge trading or rushing into investments. Track your performance, analyze mistakes, and improve consistently. Have a daily routine that enhances productivity and focus. Point two, trading and business psychology. We talked about emotional control and self-mastery. Greed and fear, these emotions destroy traders and entrepreneurs. Stay objective. Ego and overconfidence, due to maybe a winning streak, and then you feel like you're the goat, in the market. So you have to note all these: handling losses and failures, accept losses as part of the game. It's just like school fees. Decision making under pressure, you have to use logic over emotions. So follow more of your trading strategy, the structured plan that you've made that is logical. It must have a logical perspective to it, not an emotion. So you have to understand all these. We've talked about literally a lot of stuff. If you can see, a lot of stuff has been shared, other blogs. Yeah, pretty much a lot of stuff have been shared by Willie and me, and I believe that these things are now clicking for some of you guys. At this point in time, these things must be making sense to you guys. I always tell you guys to practice these things. For you, if you're only coming here to attend the lectures and maybe disappear, these things aren't gonna make sense to you until you put in the time, put in the effort. Failure to put in the effort, these things aren't going to make sense to you. You're going to see them as hard. These things aren't hard. It's not rocket science. It is not rocket science. Put in the time. These things are not hard to you. This is just how you must be seeing the market, not drawing random lines and thinking that. No, no. A lot has been shared. Go back to the market, backtest these things, backtest them, sleep in them, morning and evening, today, tomorrow, the other day, this week, the other week, this month, the other month, this year, the next year, and these things are going to make sense to you. If you think I'm lying, go and try it. Go and try it. And you'll feel it yourself. I'm just so proud. For of rather some people that are in the group and these things are making sense for them. Yeah, don't feel overconfident. Let it not rise your ego. Just remain calm. You understand? Just remain calm. It's not the end of the world. There's a lot more that has to be covered. There's a lot more that you must research. So it is very good that things have started making sense to you, but then another aspect is that you have to put in the time continuously, not simply because that things have started making sense to you and you have to stop working hard, you have to stop. No. Now at this point where things have started literally making sense to you is the point in time where you have to consistently now put in the time to study these things. All these things work, and they've been shared. If you haven't understood any of these concepts, the inefficiencies, the inputs here, the macro, these things have all been shared in the lectures, in the episodes behind in the previous episodes. So you can go to the YouTube channel and watch these episodes. Go back and dig deep. You see, whenever you watch something, be it a movie, you watch it for the first time, you may not understand. Watch it for the second time, you're going to try to find out gems. Watch it for the third time, now you're going to understand why each act was best the way it's supposed to be. You understand? It was acted the way it was acted. You will get to know more insights about why they acted that part like that. You will understand it better. It's just the same thing. If you put in your time and go back and rewatch those videos, you are going to understand these things very well. You are going to understand these things very well. And that is it. Instead of wasting your time on weird things, watching weird videos on TikTok, maybe Instagram Reels or YouTube, just focus. Watch this as a movie. Watch these concepts as Netflix. Wake up in the morning, just watch these concepts. In the evening, watch them. While you're eating food, watch them. Listen to those episodes, especially episode I think 9, that was on trading mindset and psychology. This is something that you could play even when you're jogging. Like, listen to it very well. Let it stick in your head. You understand? Failure to do this, man, it's on you, it's not on me. For us, we've done our part of delivering and we've delivered and we shall continue delivering. But the part of you putting in the time is on you. Nobody is going to come to help you to put in the time. No, it is your part. Failure to do that, yes, you'll see. There's always results to everything. There's always results to everything. Always. There's always results. You can't sow what? Maize grain and you expect to get beans. No, it's impossible. Same, you'll get maize comes at the end of it all. So whatever you sow, you shall reap. The Bible states it clearly, and even in true life, this thing works like that. There's no amount of energy you're going to sow into these markets and you shan't receive, it shan't reciprocate at the end of it all. It shall, and it has done that always. The more amount of time you put into a skill, the more it shall click. Psychologists say that in order for you to learn a skill, you must put into it about 1,000 hours in order for you at least to master it. Not mastering it to the point whereby you've mastered, but to a point whereby now you know what you're doing. And now if you convert 1,000 days, yes, 1,000 days, in order for you to master that, 1,000 days is around 4 years. Because if a year has 365 days, that means 4 years. 4 years. Oh, it's 3.5 years. So that means in order for you to master these things, concrete, strong, at least 3.5 years. And you know, okay, yes, I've been putting in my time every day, every day, every day. Now, when we talk of a day, we are talking about 24 hours. So for you, if you think you're going to come up today and you do 2 hours and you feel like, yes, now 2 hours, we are going to count 2 hours today, 2 hours tomorrow, 2 hours, like that. So that means the more you lock in, the more you decrease that time. The more you lock in, the more knowledge you get. The more you lock in, the more you pull that success closer, you understand? Keep up showing up. Like, show up every day, no matter your situation, no matter the condition, no matter your emotions, no matter the mindset. Just wake up, say to yourself, I'm doing it right now, I'm doing it right now, I'm doing it right now, I'm doing it right now. Wake up, do your morning routine, pray, do everything. If you're going to work, go to work. The free time that you have, please and please use it to develop yourself. And how you're going to develop yourself as a trader is by listening to this, is by going back and back testing these things, is by coming and attending these lectures. That's it, period. There's no addition. Don't make it hard, don't make it complex, don't ever make it simpler than this that I'm talking about. This is the key to success in trading. Consistency, composure. Failure to have these aspects, you're just wasting time. You're just wasting your time. I told you guys in the previous lectures that instead of you coming here and wasting your time, maybe attending 5 lectures and then disappearing, no, please, you should have used those 2 hours, because what I know, these lectures run for about 1.5 hours, 1 hour 30 minutes, 1 hour 40. So let's call it 2 hours. So instead of you wasting 2 hours seated here, and you know that you're not going to be here continuously, like you're not even going to go to YouTube and try to search for the videos that you've missed. It's better you just man, just chill. Go and use those hours for something. Go and play football. Try to dig. Try sports betting. Try something else literally. Because you're going to lie yourself. For us, we have delivered continuously for 2 months now. 2 months, day in, day out, in the morning and in the evening, every single day of every single week, every single day. I know you guys may be like, yesterday we missed. No, yesterday I gave you guys assignments. I told you guys in the group that use this time to do what? Back test, and use this time to do what? To plan for your week. And that's showing up still. So we've been showing up continuously. Now, if you fail to show up continuously for these lectures and you also fail to watch the YouTube videos, we even put in time and energy to record these videos and then still post them for you guys. And please, even for those guys that are watching us on YouTube, maybe in 2013, 20 what, please and please stick to these videos and watch them. Watch them. I'm seeing you're trying to watch a half of the video and then running away. No, there's no way this is going to take you anywhere. If you've decided to click on the video and watch it, please watch it to the end. Like, who knows that the gold is at the end? Who knows? Yes, you started digging for the gold and then you're stopping halfway. What if you are just a few shovels from the gold? Like, you are just a few digs away from the gold. So just keep on digging, keep on digging, keep on digging, keep on digging. Dig until the end of the video. Have notes, have a journal. All these things are here to help you guys. Now, failure for you to notice this and capitalize on it, it's on you, it's not on us. And at the end of it, you'll be coming again, help me here, help me there, help me there. I'm not saying I won't help you, but then these things are crystal clear. Have been explained crystal clear. Yes. They have been explained rather. So if you have not understood the concept, go back to the YouTube channel, rewatch it. If you have not understood the concept, before you even ask me, first try making some research. Try making some research. Add on your knowledge. Try to read some books. These things are going to help you. So, all has been said. Let us go back to the charts. So nowadays we are into a lot of doing more of chart work than teaching all these things. We've been teaching you guys these things, and I hope all you guys now know these things. We've been singing about them. So let us dig down into the charts. Let us dig down into the charts. Okay, so that's it. So we've taught all these things. Just feel free, go back to all the YouTube channels, to all the YouTube videos, and rewatch them. Rewatch them until you master them. So back to the chart. So is everybody seeing the chart? Yes? Alright, so let us try to break down this chart. Let me try to remove everything. Okay. So as well as, let us go to the 1 hour. Let us have a bigger perspective on this. Alright, so let us label last week. Let us label this week first. And then let us label again April. So we label April. Where does April start? So I label The first day of April, first day of price action in April. Well and good. See here first was a Tuesday. Yeah, so then March, where did March start? Alright, March started there. So now we can look at March. What was March literally? March was literally the last phase of accumulating. You can look at March. This whole price action here is of March. So this is March here. March price action. So now you can see that March has been a sort of accumulation. So what are we expecting in so you have to understand that price moves in quarters. There's the quarterly theory, and the quarterly theory is you split the year into 4 quarters, which are three months. So if you split the year into three months, you will get what? 4 quarters. So the first quarter is done, which is January, February, March. So the reason why I've marked March price action and I've called it accumulation because yes, that's what the first cycle, the first quarter of the year is expected to do, and we can just see it from here at the end of March. We can see it that March in particular did what? Accumulated. So what are we expecting from April, May, June? We're expecting price to do what? To basically manipulate. So now we can see that March, this is March low. This is the lowest point of March here. This point here. You can see that point. Is everybody seeing it? Let me try to thicken that line. Thumbs up if you're seeing it. That line that I've put there. This is March low. Thumbs up if you're seeing it. This is March low. The spelling of March low. So now, if at all we're having that as the lowest point of March, then this is going to be the highest point of March here. So this is the highest point of March. And now since it is still intact, we are going to just call it March. We're going to call it March high. So now, March high. So yes, March low and March high. So you can see if I zoom in closely here, now we are just looking at this price action here. You can see clearly that March low was taken out. Is everybody seeing that? Yes? Thumbs up if you're seeing this. March low, this is the lowest point of March. And it was taken out here by this impulsive move, and this was a Wednesday. I remember this. Now this was a move that caused the fall on the New York stock market. This move here. And if you go on gold, it's just the same thing. Like Wednesday was crazy. So this movement here was made to do what? To come and take out what? The lowest point of March. I hope everybody is getting this. So they come, they take out the lowest point of March. So now when they take out the lowest point of March, what are we thinking about? We are thinking about what? Continuation deeper. So now what happens? You can see clearly. I hope everybody is seeing what happened. This thick candle here on Wednesday, April 25th. No, rather on April 2nd, came, took out March low. But you can see, what did it leave? It left a fair value gap and a what? A void. Is everybody seeing the void here? A void is just that gap in between candles where there's no price action. Thumbs up if you're seeing it. Let me zoom out so that you can see it very well. Is everybody seeing this gap here? This one, this gap, like where price action ain't, it's just literally a gap. So we call that a void, and there's a fair value gap here. You can see it, but literally, is everybody seeing how they came back to balance the void and the fair value gap all at once? So let me label for you the fair value gap. Let me first label the void. So this one here is the void. This is the void. So you can see. So this one is the void. Void. So that's the void. Let me change its color to blue. Yeah. So that's the void. Then this is the fair value gap, literally from this low to this low here. And that's our fair value gap. So they balanced both the void and the fair value gap. Okay, let me try to make it. So you can see that the void and the fair value gap were balanced all together. So this one is the fair value gap. I hope everybody is understanding this breakdown. So now if you see that, we are going slowly. We are trying to understand this market. We are trying to get its feel. We are trying to understand it. It has to be sweet like this, literally. So match low has been taken out by a void and a fair value gap, thick candle that is displacing heavily to the downside. So what does this candle show us? Or what story is behind this candle? The story behind this candle is that there's a lot of selling momentum, selling volume, selling pressure coming in. So that's why after this candle here, what are you expecting? You're expecting price to come back and balance it to offer fair value both to both the buyers and the sellers, and then continue in its intended direction. That's why you see price came back, balanced the void, balanced the fair value gap. They tapped into the fair value gap and the void. What happened next? No wasting time. Price continued in its intended direction. So you can see that price continued doing what? Dipping down all the way from up here, continued dipping. Up to now, it is still dipping. Recently, it has just today, price has retraced back to a fair value gap. I'm coming to that in a few minutes. So let us try to still analyze this. So we can see that after price labeling, rather balancing that void and fair value gap, it came back and took this low to this low here. This is previous week's low, right? The previous day. They took out the previous day low. Previous day low. So they took out Wednesday's low, which is the previous day. So they took out that low on what? On Thursday. This candle here, bring my guy, my arrow, my sniper arrow. Alright, so we can see that this candle, this black candle here, this black candle that took out this low or this week is on what? Thursday. You can see Thursday at exactly 10. And then this candle was made on Wednesday, the previous day, at 1800, which was the opening of Asia session. So it was taken out here in New York session on Thursday. So they took it out, price retraced back a little bit into this order block. You can label this order block here, you see it. This green candle here is an order block. So now if we label it, let me zoom in for you guys. We label this candle. So we are going to use the bodies so you can see. We use the body of that candle. Price came back to it there. So this one is going to be our order block, OB. So you can see that after taking out this low, this green candle came back and tapped into it, and also this black candle tapped into it. So literally they tapped into it 1, 2, 3 times. One green candle, one black candle, the second black candle, actually 4 times, then before it displaced again. So you can see that this order block was used as what? Resistance. This order block here was used as resistance to push price below. Now you can also see for precision that the bodies of these candles that were retesting into this order block never passed what? Mean threshold or consequent encroachment, or something you could call equilibrium. So that middle point there of the order block, the bodies of these candles that we're testing there never passed that point, which gives us more clarity, more confidence, and more structure to know that price is now heavy to the downside. Price is heavy to the downside. Why? They've taken out previous month's low. They've balanced the fair value gap and the void. They've taken out the previous day's low, which was Wednesday, 2nd of April. On 3rd April, which is a Thursday, price leaves this order block, takes out the previous day's low, which was Wednesday, then comes back to retest it, and the bodies for some reason are not passing what? Mean threshold or equilibrium of this order block. Now this gives you a story behind whatever thing is happening. It shows you that there's a lot of momentum, there's a lot of volume, there's a lot of heaviness to the downside. We are expecting a lot of downside price action. So what happens? Price displaces to the downside. It displaces to the downside and still breaks this low of Thursday here. On Thursday still. So they break this low. So we're just reading structure, price. So yes. Anyways, that low is still on Thursday, so I'm not going to labor it that much. So they break this low. So, but I just want you guys to see this black candle that comes to break this low. What does it leave? It leaves a fair value gap. Yes? Is everybody seeing that candle? Thumbs up if you're seeing it and if you're following. This black candle here that breaks this low. Yes? Is everybody at par? Is everybody understanding and following the storyline here? This black candle that breaks this green candle that got a rejection from this order block. What happens to it? They take it out with this black candle, and then this black candle forms an imbalance, which is a CB. Sell side imbalance, buy side inefficiency. So we label this fair value gap. I just want you guys to see the precision here. So this is the fair value gap. The previous candle's what? Low. This fair value gap shall be used for future reference. So you can see from that low. So we shall draw this fair value gap from this low of this green candle here, from that low of that green candle to this low of this black candle here. So this black candle is the candle that has had no interference from any wicks, so it leaves an inefficiency. So now you can see that further in future, on Friday, actually still on Thursday, price comes back to do what? To fill in that fair value gap. Has everybody seen how they filled that fair value gap there? Yes, thumbs up if you've seen that fair value gap has been filled. Yes, the fair value gap has been filled in by this candle's wick here. And still, it's telling us a story. Which story? Price is not closing above mean threshold or equilibrium or consequent encroachment. It is stopping at the what? The discount level. The discount level. It's not going to the premium. I hope everybody is seeing that. The bodies have even not closed inside. They have closed below. It's only the wick that came and tapped and balanced that fair value gap, and the body is closed below. Now this gives us more clarity, more confidence, more knowledge that price is heavy to the downside still again. So now price does that, and what are you expecting? You're expecting rejection, and still we get rejection. But then this same candle here is acting as what? As an order block. This same candle that came and balanced this fair value gap is acting as an order block after they took out this low here. So let us label that low. This low. So they took out that low. So after taking out this low, price left this order block. Then this order block is also being used as what? Resistance. So we can label the order block from its bodies, starting from there to there. So that's the order block. Is everybody seeing that order block? Order block. Thumbs up if you've seen that order block and how it's offering resistance. We can see this order block. Wow. So if you look at this order block here, it's offering resistance in a way that still price came back to it, but then it came back and stopped in the body. The body is closed below the body of this black candle that came and tapped into that order block. It stopped or it closed below the order block. It's only the wick that reached there, which gives us more clarity and more confidence that price is still what? Bearish. I think you guys are seeing how these things are making sense now. So there are endless opportunities. You could read this in the morning, in the evening, the other day, the other time. Man, you just have to put in the time, lock in, lock in, lock in, lock in. These things are possible. These things are possible. It's not magic, it's not supernatural. So you can see that price comes back, balances this order block, and what happens furthermore? Price pushes down further. It pushes down. Pushes Thursday to Friday. Price is still what? Heavy to the downside. So we can all see that price came and broke this low once again. Boom. That low taken out, and then we're having this heavy candle. Whenever you're seeing these heavy candles, these bearish big candles, just know momentum is coming in. We are talking about big momentum, big price action to the downside. Why? Because it leaves, or it shows volume, it shows high momentum, it shows heaviness to the downside, and it also leaves what? Fair value gap. So price shall always come back first, balance this fair value gap, then shoot down. So is everybody seeing the fair value gap before I even label it? So let me label it for you guys. So you can see the fair value gap is here, and what happens? Same thing, same thing, same thing. Price comes back, fills in that fair value gap, and we ride it to the fair value gap. Price came back, filled the fair value gap, it stopped below the mean threshold, which gives us more clarity. This is the mean threshold or equilibrium or consequent encroachment, that middle line that you're seeing. So price, if price comes and stops above here, okay, it gives us more clarity, and but if the candles pass through it, then they have violated that fair value gap. It's no longer holding, or it's no longer giving us bias of it being used as a resistance level. But then here it is performing its job of giving us resistance in the highest possible way by stopping price bodies below the consequent encroachment. So we can see that price came back to fill it in 1, 2, 3 times. 3 times. And the bodies were closing below mean threshold. And what happened? Same thing, we got rejection to the downside. Boom. And just like that, price did its thing. Price got delivered to the downside. Price got delivered to the downside. You can see price got delivered to the downside. And just like that, so this price action brings us to today. So you can see that this fair value gap furthermore today was used as what? Reference. Is everybody seeing that? Yes, is everybody seeing how that fair value gap was or has been used as reference today? Because price has come back to it and they've still left a wick there. what comes into your head? Price has come back to test that fair value gap and do what? And continue dropping. This is today's fair value gap, today's opening gap. So every day begins with an opening gap. So the opening gap is just the difference between 1600 to 1800. So you can see that this is our opening gap. So this one is our opening gap. Let me label it opening gap. So now you can see it. It was balanced very well and used as what? Support to push price further. Apparently it's even still being used as support to push price further. So now you can see that we're having two what? We're having 2 points of interest. 2 points of interest. So we are having this fair value gap and this opening gap. If they violate this fair value gap, gives us an inverse, and we believe that price is at least going back up to do what? But everything is balanced. So maybe it's going to take out old highs, like this high may be used as a liquidity reference. This high here, so we can label this high, pull it further. It can be used for reference in future. But then you have to understand that this fair value gap here is already offering, this fair value gap here is already offering what? It is already offering resistance. We started from up, literally. We started from March. March was accumulating. What happened? At the end of March, it formed March low. At the beginning of April, what happened? Price did what? Spiked up, then did what? Spiked down to take out what? March low. Now this shows us volume and decisiveness of April price action to do what? To deliver to the downside. There's a lot of momentum, there's a lot of heaviness to the downside. What did this candle leave? It left a void and a fair value gap. They came back, they filled in the void and they balanced the fair value gap. They broke structure. There was an order block there. They filled in the order block. There was a fair value gap there. They filled it in. Almost each and every point of interest has been filled until we reach here. This fair value gap that gave us resistance here, pushed price down. We have this opening gap of today, Monday. So today, Monday, price bought up to this level and got rejected. Back to where? Back to the what? Opening gap. But I'm still bullish. I'm still bullish for today. Why am I still bullish? They violated this opening gap, and you can see that after violating it, price is only stopping in the upper quadrant. It's only stopping in the premium of this fair value gap, of this opening gap. You can see the candles are not passing below. The moment they violated it, all the candles are stopping here. The candles are stopping here. Also, this recent candle that has bought, it has reacted off the premium section of this fair value gap, rather discount section. Yes, discount section. So you can see that it bought from there to the buy side. I think everybody is seeing that. Is everybody seeing that? So what are we expecting? We're expecting two things. If price can come and violate this fair value gap, then it shall state our willingness to buy this week, or it shall give us bias of bullishness this week. But if it continues further and breaks this opening gap, then it shall give us what? Bias to sell or to continue selling. Why? They would have balanced this fair value gap and it would have offered resistance to price, and then we would see rejection. So now, furthermore, if we dig down to the downer time frames, you would see that I had a buy setup here that I sent even in the group. So there was a buy here, there was this buy, then there was this buy. The rejection from the this rejection here from the discount part of this opening gap is what I called, or is what I saw rather. So let us break down to the 15. So you can now start seeing things clearly here. For those that have come late, you could watch this YouTube video. We are recording it, and you have to remember that there's a lot of information that has been shared. There's a lot, so you don't want to miss this. Go back and rewatch it, rewatch it, rewatch it, rewatch it. So we can all see the opening gap there. You can see the opening gap and the 1 hour fair value gap is there. So you can all see they tried forming. Actually, now this what gives me more bias that price is still heavy to the downside, or price is still decisive to deliver price down. We are having this liquidity level. First up, these equal lows here, they are too clean. They are like too clean now. Is everybody seeing those levels there? They are too clean, like too clean for life. Is everybody seeing that? These equal lows are too clean. This is liquidity, man. This is liquidity. So yeah, I'm expecting price to let price do its thing, but man, I'm expecting some sales, man. So, but it depends. We're just reacting to the markets. We are not doing anything. So you can see how this opening gap offered what resistance, or offered what support to deliver price up. It left this fair value gap here plus an order block. So there's an order block here. Label for you guys this order block. There's an order block there. Let me change its color. Black. So this order block OB. So there's an OB there. So that OB offered what support to push price further. So I would have your trade there, buy, and yeah. So we can all see that price got support from this fair value gap here and the order block that are all in close proximity to each other, and price was delivered up, and price is still delivering to the buy side until they violate any lows, especially if they can come back and just violate this order block, man. It shall give us higher probabilities of thinking about our bullish bias. But apparently we are still bullish. Why are we still bullish? Simply because price violated the opening gap. Instead of using this void here to provide resistance to push price down, they came and they violated it, and they came back to it. They came back to its consequent encroachment and did what? And got what? Support to push price further. Is everybody seeing that and understanding that? Yes? Is everybody understanding? Okay, so yeah, so basically this is it. I hope everybody is seeing this. Go back to your charts, back test these things. These things work. As you're waiting. So apparently it's just 1 minute to 2 p.m. New York time. So we can be expecting a lot of momentum and volatility coming in. But if at all in any time they purge above this fair value gap, we can expect a lot more of bullishness coming in. So yes, let's wait. We're having two logical points of interest: this fair value gap and this opening void here, opening gap. So if they purge any, yes, we shift. So they've got resistance from here already, they've got support from here, so they are playing in the middle. What are you expecting price to do? To consolidate. I hope you guys are seeing this and how it's making sense. Yes? Is it making sense to you guys? Price got resistance from this fair value gap here. You can see this week. Then it has got support from this opening gap because it violated the opening gap. So they are playing in the middle there until they get decisive on the direction they want to deliver. Price is going to still be doing what? Consolidating. Same thing if we try to go to the down. Let me try to go to 5 minutes. You see, is everybody seeing how price is ranging in between there? Is everybody seeing it now? Price is ranging in between. Is everybody seeing it? So literally, if at all you're interested in trading NASDAQ, you should wait. You should wait for one of those logical points to get broken. You can see how price is just playing in between here. There, 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 now here. So this is what I'm expecting. Literally, I'm just expecting it to continue with this playing, to continue. Either they break here and just continue up, or they come back and break down here and then do this and continue down. So that's what I'm expecting, but failure for that to happen, then yes, price is still accumulating, and then it's not nice to trade in such situations where you're having a point of resistance and a point of support. So what are you expecting? Price to do this. So if they do not break this point today or this point today, then fine, you can go in 1 minute and you find short scalps. Could have scalped this move, but yeah, just for you to trade momentum and volatility. It's nice that trading accumulations and consolidations. Though there are some people that their strategies favor consolidations like this, so you're just waiting for price to come back down here, you buy, you wait for price to come back up here, you sell, but then it's dangerous. At any point of time, price is breaking through levels. I hope everybody's understanding that. So we're having two logical points of support and resistance. This fair value gap here is our resistance. This opening gap here and this order block are acting as our support. So I think you can see how you can use those 2 points as support and resistance. Let me go back to 1 hour and you see them. Is everybody seeing those points? Is everybody seeing them? This fair value gap is our what? Resistance. This opening gap here is our support. Is everybody seeing that? So that's how you can use this to your benefit. So anything in between here, you're just playing with the market. So anything in between here is just going to be like zigzag, zigzag, until maybe they break this low, come back here, retest, then shift, or they break this high like this, come back, retest, and then boom, we take it to the upside. Failure for that to happen, we are still waiting. So I hope everybody has understood this breakdown. Okay. So this is on 1 minute. This is the noise on 1 minute, literally. So this specific period of time is lunch. So from 11:30. So yeah. So it's already 2. It's already 2. So now these are the PM cycles from 1 to 130, from 130 to 2, from 2 to 30. So we want to look at how this cycle, because now this cycle here has taken out the previous cycle's high. This one is the previous cycle's high here. So what are you expecting when they take a previous cycle high? I'm expecting one of two things: a continuation or a reversal. Previous cycle high. Let me put this in black. Previous cycle high. This one is previous cycle low here. Previous cycle low. This one is previous cycle high. So this one has been taken out already. So we are not going to. So that one has been taken out, previous cycle high. So what are we waiting for? We are either looking for a continuation or a reversal. So for confirmation, so you can also see that here we've had our what? Accumulation. Then this can act as a manipulation. Then yes, let us see where our distribution is going to fall. So we wait for this next cycle from 230 to 4. This is now the distribution cycle. So for this one here has been the accumulation. This is specifically for the what? For the launch cycles. These are launch cycles here. And this one has been manipulation. Now to confirm that this is clean accumulation, are you seeing that it has not taken out previous session high or low? Are you all seeing that? It is just consolidating here. It has failed to take out previous cycle high or low. Is everybody seeing that? So which confirms this as clean and clear what? Clean and clear accumulation. Then now this is our manipulation. So let us wait for our distribution in here, in this last cycle of 90 minutes, up to 4 when the stock exchange market closes. So we have to wait and confirm whether we are going to have a continuation up back to this resistance level, whether we are going to have price action. Do this, we have to wait. Maybe price shall come back a little bit here, then start shifting up in a continuation phase until it just jumps there. Boom. That's scenario 1 on NASDAQ. Scenario 2 is price to give us this, and then break up, give us a clean shift, retest, then start falling down like this up to this point of support. So we're having a point of support and a point of resistance. So yeah, we shall wait for that. Price they will leave here a fair value gap one order block after the shift structure, take out a low. Yes, after taking out some buy side liquidity. Yeah, and you take your sell from there. Yep, that's scenario 2. So these are one of the two things we are expecting for price to do. So, but until that time, we are just still waiting, hands up. Just watch price as you eat some popcorn. You understand? So just leave NASDAQ do her thing. She's just sweet, you know. She's just beautiful, man. She has beautiful price action. It's crazy. No, which pair gives you such, man? Like literally, let's go back to 1 hour. Like, which pair can you break down smoothly? Like, man, stop this, man. We've broken down NASDAQ smoothly. Smoothly. It's not even a currency pair, man. It's not. It's a futures contract. So you can see, you can see some big candles, big candles, big candles, or it's big candles, big candles. Is everybody? Man, it's just big candles, big mix, man, big mix. It's just a big mix, big mix, big mix, big mix. So yeah, so we have to wait for price to do its thing, and we shall react. We shall react. We shall react. So apparently we are just waiting. Hands are up. Yes, and with this, I believe we've reached the climax of today's session. Any questions? Yes, Ivan, I'm seeing your hand is up. Yeah. Pardon? You write down the question. Write it down. Write it down in the comment section, the chat. Write the question down in the chat section. Adrian, you're saying that you're waiting for reversal. Okay, when choosing an order block, do we consider bodies only? Ivan, are you still there? When we are choosing an order block, I like using the bodies. Why? The bodies tell the story, the wicks do the damage. So that's why I like using the bodies, the bodies, the bodies. Ivan, have I answered you? Thumbs up if you've got what I'm trying to say. The reason why whenever I'm marking an order block, I use the bodies is because the bodies tell the story, the wicks do the damage. The bodies are giving me more reference than the wicks. But then you could use the wicks, but then I prefer using the bodies. Are you understanding that? Yes? Okay. Alright, I just hope you've understood. Um, I just hope everybody has understood today's lecture. Zones multiple times, what's that? What are you trying to mean by zones multiple times? You can see how price is accumulating here. It's just accumulating this whole price action. It's waiting for time at exactly 2:30. You're going to see some massive pull of momentum, and another one. So does price react more? Yeah. Sure. If price at all comes back there, we shall expect maybe continuation or something. So yeah, I hope I've cleared the noise and the answers and everything. So with this, would like to close off today's lecture. So Yes. All right. But you write down the question. I'm not picking you. Write down the question. You're breaking. I'm not picking you. Write down the question or whatever you want to say. So this has been a wrap. This has been a wrap. But still and still, I would advise you guys, encourage you guys to put in the work. Put in the work. The work is not going to buy you. This is it and this is it. This is the way. This is the way, the truth, and the light. Just as Jesus said in the Bible that his words, the book, the Bible is the way, the truth, and the light. Him himself, he is the way, the truth, and the light. And whoever follows him is going to have what? Eternal life. So stick to the grind religiously. Stick to it, put in your time, put in the hard work, put in the vibe, put in the vibe, put in the vibe, put in the vibe, put in the vibe. Nobody is going to see you hustling. Nobody has to even know that you're hustling. Put in the background work. That's how success is attained. If at all you deserve anything, failure will never overtake you if your determination to succeed is strong enough. You have to note that. Failure will never take you if your desire to succeed is strong enough. If you have discipline over motivation, instead of waiting for people to come and motivate you, but you have that discipline to wake up every day, do your morning routine, go to work, back test, do each and everything that you're supposed to do at the right time, in the right place, you're going to make it. You'll be successful. Success is your portion. But if you're this kind of people that are always waiting on someone, blaming someone for something, blaming Trump, blaming the brokers, blaming all situations, zero spread, what, and those things ain't gonna help you. Do you think Trump has time to go there and manipulate the market? He doesn't have that time. Same as your broker. Your broker doesn't have that time to manipulate the market. Everything starts with you. You're the problem and you're the problem and you'll still be the problem. So failure to correct yourself, yeah, that's what happens. Okay, let us close off today's session with a prayer. Lord Father, I thank you for the gift of life. I thank you for the knowledge, wisdom, and understanding you've given us to understand whichever things we have shared today. And we pray that you give us more and more and more of life, more and more and more of courage, endurance, perseverance. Lord Jesus, pray that you protect us in each and every endeavors that we are doing, the journeys we are taking, the paths we are choosing. Lord Father, walk with us each and every day in our businesses, in our families, in our friend groups, in our classes. Lord Father, guide us in each and everything that we do. We thank you, we thank you, we thank you. We do not request for anything, but we thank you for whatever we have right now. Furthermore, Lord, we thank you for the hands that we have that can still press by or sell, Lord Jesus, that can still make analysis, the eyes that can still see the candlesticks. Lord Jesus, we thank you for that. We do not take it lightly. It's a privilege, Lord, for there are some people that can't see candlesticks, that can't press the button to buy or sell any asset. But then, how blessed are we that we have them? We pray that we all have a good night today. In the mighty name of Jesus Christ, we pray. Amen. So this has been a wrap of today's session. And we can see price is bouncing, bouncing, bouncing. So yep, this is a wrap. We call it a session. See you guys in the next one. See you guys in the next one. Have a nice time.